with us in conversation with the top management of TCS and the CFO and the head of HR, Ajoy. Rajesh Gopinathan joined us. Congratulations, fantastic quarter. I mean, I was discussing with Chandra that how deal momentum is looking strong. But, you know, Rajesh, I just want to clear the air. At the press conference, there was some confusion on where the margin trajectory is headed. Margins have come down in this quarter, but that's largely because of wage hike. So that's not disturbing. Where we need clarity is that are you looking at changing your margin band, or that old communication still remains?
We're definitely not looking at changing the margin band. So the target margin band continues to be 26 to 28, and we are quite happy with the trajectory that we have in this quarter, because the 200 bips impact due to the wage hikes is typical, it's cyclical, and compared to that, we have delivered about 120 basis points improvement on business improvement in the margin side of it, and we had another 20 bips on the exchange. So the business improvement in margin is fairly heartening. It's come through a better mix of business, higher margin services like enterprise solutions, consulting, European markets, UK markets, all of them have started doing better, and that's what has supported the margin. Other operational efficiency parameters like lower attrition, better leverage on our external consultants or the BA usage that we have, each of them has also supported it. So we're quite happy with where we are on the trajectory side, and continue to stay focused on profitable growth and the targets that we have set for ourselves.
So what are those targets?
As I said, 26 to 28 is the band that we have set for ourselves.
Ajoy, my compliments on the way you're managing the entire utilization and the attrition rate. Attrition rate, I think, is at a 6-year low, almost at a 6-year low right now. This is largely a process of, like you were sharing with us, that you're looking at training, you are looking at again extending the employee program. But do you think on a longer term basis the attrition rate could settle here?
See, attrition rate, we used to operate even earlier. If you look at it, it's been 10 to 12% also we have operated. 12 to 14 was something that over a period of time became where it used to be. But over the last couple of years, it shot up to about 15, 16%. Now we have brought it down again to about 13.5, 13.6%, which is overall, which is IT and BPS put together. And 13.6 is basically LTM, so which is last 4-quarter attrition at this point in time, and IT is 12.5. Now the question whether it will settle in here or not, we would definitely like it to be lower. And so going forward, the kind of employee engagements, the kind of activities that we have in terms of training, in terms of building competencies of our people, in terms of rotating them from project to project, etc., those kind of processes and policies will continue.
But Ajoy, on a 3-year basis, maybe on a 5-year basis, do you think the entire structure of the way Indian IT sector or Indian IT companies have been hiring, will that change? And the reason why I want to understand this, from you is because we are looking at a new generation shift in technology. Automation is the name of the game now. Digital means more manpower involvement. So will there be a linear shift in the way how you would be doing hiring, not only for TCS but otherwise for the industry as well?
See, as we go forward from a digital point of view, if you look at it, it's primarily the kind of knowledge, the kind of the knowledge or the way the technology is being used that comes out. It's primarily coming out from the new generation that is getting into the job market, which is our campuses. So that campus hiring will definitely continue the way we have been hiring. And at the same time, this is also giving us an opportunity to improve the overall productivity, the way we deliver to our customers. So that is one that is going to happen. So going forward, I think, as we have mentioned last year itself, that as far as our total hiring this particular year is concerned, is going to be lower than what we hired last year. Last year, our gross addition was 90,000. Right. So that is what is going to play out going forward. So it will be more of the kind of, but it will also need a lot of depth as far as the domain knowledge is concerned, because in terms of digital, if you have to do it, the whole transformation game, you do have to understand the business pretty well. So it's complex. It's going to play out over a period of time. It will be very difficult to predict, but yes, there will be more and more automation, and which will definitely have an impact as far as the kind of skills that you have, the kind of competencies that you will create. And if you look at the way we have grown in TCS, it's been primarily rebuilding and building. So skilling and reskilling has been the major strength of TCS. We have gone through multiple phases of technology shift, and it's always that given the scale and the size and the geographic presence that we have, is not possible to acquire that skill every time a new technology comes in. You have to learn, and that's more of a DNA, more of a culture of the organization itself. And that's what I think, that's what we have built, and that's what we'll focus on.
Fair point. Is it slightly nightmarish now to manage cross-currency volatility? Pound is flying one way, emerging market currencies are going one way. I mean, as a CFO, I'm sure it must be a nightmare right now.
It's a bit of a difficult one. As you said, both things. There's volatility and then there is cross-currency. And quite frankly, the markets, not the experts, seem to quite know where it is. So we continue to stay with our existing hedging policies, which is we hedge our receivables 100%, so protect the balance sheet. And on the revenue side, we take a rolling 2-quarter kind of hedge position to give us some amount of, support over a short period. The rest of it, we'll have to see where it settles down and how it impacts.
Broadly, how much of your current revenue is coming in non-dollar currencies?
About 45 to 46, in that range.
So if I look at, so rather than looking at the dollar revenue, we should always look at the aggregate picture.
Yes. Remember, as I said, within that itself, there are people going on either direction. So,
we addressed some of these points in the last interaction as well, but those concerns are still there. And the concerns, I think some of the concerns are real in nature. US presidential election, the impact what cross-currency will have on your balance sheet, the fact that the US labor market now also has stabilized, which means there would be natural inflation even in the US labor market. So how would you like to address these concerns?
Okay. All three of them are three different areas. Let me first address the cross-currency. I don't have cross-currency risk on my balance sheet. Okay. That's a very important point for us because while we talk a lot about it, it's really a P&L one. It's about incremental revenue, what is the structure of it. And therefore, the impact is also minimal in the sense it is only for that incremental period rather than a big balance sheet number moving and ripping apart your P&L. So it's a good business that what we have. I mean, among all other businesses, our exposure to volatility is typically lesser, and we have the ability to structure change and build on it. The second or the third question that you asked about the US labor market, the US labor market is a good proxy for the US economy, and a tightening labor market would typically be accompanied by a vibrant economy, and we're well present in that sector, and I think we would be participating in that growth and doing well. So to me, while it might have short-term implications, but long-term structurally, it's a great thing for us. The other question that you asked about the US elections, it's a democracy, there are politicians, and it's difficult to make a call. Whoever comes to power, whatever be the legislation, we will stay compliant, and we will structure our business model to be compliant with the realities of what emerges.
Ajoy, we've discussed this aspect in the past as well. Some of my questions today are repetitive, but this time the difference in my question to you is that we've seen US presidential elections in the past. Every time there is a lot of noise around anti-outsourcing, but this time it's the signature campaign of the Republicans. They want to bring jobs back to America. So should we be cognizant of what's going on in American politics? That's your biggest market. A change here or change there could really change the way, the dynamics of the IT industry.
We need to be definitely aware of what is going on, and from the market point of view, it's a pretty big market for us.
Is it a real concern?
From the point of view of, basically the kind of regulations that will come in, it will be in terms of the visas, the work permits and things like that. And that, I think that we have seen different forms and shapes of different kind of bills being presented. And that is what we need to be aware of, and what is it that, how will that play out as far as our ability to service or to serve our customers are concerned. So it's a question of from where do we get the right competencies, how much of it do we acquire locally, and how much of it is through productivity or through offshoring that can be done from India. So these are, or from many other centers globally that we have. So it'll play out accordingly. So in my view, as I think as Rajesh mentioned, so whichever way it goes, we have to be compliant at any point in time. So there are no two ways about it. So we have to be compliant, but at the same time, we do have our plans in place, and we have been hiring locally. We have been doing all that, so that we will be able to meet the requirements that come out.
Rajesh, Chandra just told me that he's excited, he's confident, yet he's watching the landscape. Now, these things don't go together. Either you're confident or you're watching the landscape. What is the true picture?
Oh, no, both of them go together itself. So let's say that
either you're bullish, either you're bearish. That's how we say in markets, right?
watching the landscape is not about being bullish or bearish. You're confident because you see
Feet on the
perfectly
ground.
good growth.
All that it means is, yes, we are confident,
No, but
we are
if
this
the
thing, but we have feet on
communication
the
is
ground.
that business is looking strong, if the communication is that there are no client cancellations, with the exception of let's say what's going on with Diligenta and Japan, all other verticals are strong. If the growth is all round, then the communication should be that, guys, it's great time for us. I mean, we are growing and we are excited about it. How come I'm not hearing that from you?
The elephant in the room is Brexit. Right?
Okay.
June 23rd, nobody anticipated it, and June 23rd is hardly a few weeks back. It's ripping through the political part of the economy. Its impact on the real economy. The financial markets will always react immediately. The impact on the real economy comes with a bit of a lag effect. Now, what will that impact be? We'll have to wait and see. What will be the impact? On whom will that impact be? What will be the reactions around it? And we are in close contact with our customers. And the honest answer is that most of them don't know as of now. They have various scenarios, they have various plans for it, but which scenario will play out, nobody really knows. So that's what is reflected in our commentary also.
So if Brexit issues don't come to fore, then what happens?
If Brexit issues don't come to fore and the
then
world
it's super
is
business?
If the world is on super growth, we are on super business. That I can assure you.
Okay. We talk about Brexit, but I want to talk about US, your major market. It's that time of the year when you get a lot of clarity about client budgets. There was a little bit of communication along with your Q4 numbers that you got a sense that budgets are likely to remain flat. Is it status quo? Do you think budgets will remain flat?
It's, again, difficult to call because our largest sector is BFS, and BFS is not about US or UK. We got to see what the impact is. Whenever there is uncertainty in the market, all these sectors start getting that uncertainty reflects into those markets. So we are seeing decent growth. We have seen absolute growth across all. In fact, absolute growth has been higher in this quarter than the previous quarter, and we'll build on it. But where it goes from here will depend on, as I said, how it plays out. I think the next few months is going to be a important period to see what the anticipated impact of it and how people start building that into their business plans. We will get to see that only in the next few months as the clarity emerges on the political side and then the economic side.
So just to clear the air, I don't want to get this message wrong. As of now, the only thing which you are watching is the Brexit event. Apart from that, in terms of business, minus Diligenta, a little bit of here or there from Japan, business is looking strong. You're confident. Order book is robust. I want to hear that from you.
Absolutely. So whatever you so, as you said, sans Brexit.
See, now your body language is telling me that the company is growing. Are you trying to downplay the expectations?
It's not about being downplaying or upplaying. We're telling it as it is. As I said, we are in no better position to judge it.
Okay.
And we'll have to wait and see how it plays out.
Come on, next quarter you will tell me, what for the US presidential elections? Correct. Something is going on in the world every time.
Absolutely.
Okay. Now, Ajoy, the hallmark for TCS has been that you've been gaining market share. The global outsourcing market is not growing at 10%, yet TCS is growing at 10% plus. Is there a limit to which you can gain market share?
See, as far as the overall IT industry is concerned and the way the technology is playing out in all industries, in all segments, that itself is, the whole market itself is growing as far as IT is concerned. And within that, TCS's share is growing. So definitely, it's a beautiful business model that we have, good business to be in, and that is all that I can say at this point in time.
Rajesh, historically, when I've looked at IT communication, it's been very standard and it's been very synchronized. What you've indicated applies for the rest of the industry. What others have indicated also applies on TCS. I see a variance this time. The comments which are coming from Cognizant, the comments which have come from an Accenture, what we're hearing from India's number 2 IT company, and what we're getting from you today, I cannot marry all of them together. Why is that?
So while we still think about the industry as a single one, each of the companies has been executing on different strategies and focusing on different areas. So we think of it as one homogeneous mix, but quite frankly, if you look at the commentary, everyone has got their own strategies and they're executing on it. So the commentary reflects their own views on that strategy. Overall, I think we are where we are in terms of seeing the market the way we are primarily a technology-focused company, very focused on delivering business solutions, focused on customers and increasing market share with our existing customers and steadily growing our business with our set of customers, and providing a complete full suite of services, a broad portfolio of services. That strategy is playing out well, and that's the positivity that we are reflecting. And as I said, sans a large macro event, that seems to be a good strategy as we expand on it.
Just to get some closing comments from you, Rajesh, now, your productivity gain is also a function of better product mix. You're moving up the value chain, front office work, you're moving into consultancy, digital. What is that sweet spot for you? What is the sweet spot for you where your new business will take over the traditional business?
You should think about our business as a continuous churn business. So take it back over a 10-year period, e-business was a new thing. Today, digital is a new thing. Tomorrow, something else will be. And the trick for us is to continuously be on this renewal path. There is no specific sweet spot. It's about churning it through. Probably 5 years from now, when we talk about it, everything will be digital, and we'll be talking about the percentage of the next new thing. And that's the lifeblood, the ability to keep on staying relevant as each new wave comes about.
You know, I scanned through your annual report, and your annual report talks about, Ajoy, about the staff training aspect. You've trained nearly 1/3 of your employees. Are you looking at extending that training program further? Are you looking at rebooting more employees?
Of course. There
What
is
is that
no
new
doubt
number
about that. Because as we have been talking about, digital is something that everybody will have to be trained in digital, because everything will become digital at some point in time. And last year we said we will train about 100,000, and we ended up training about 120,000 as far as digital is concerned. And even in this quarter we did about 25,000 more on digital technology.
So where will that number settle eventually? You told me a number, it was 1/3 about a year ago.
Eventually everybody will be trained.
Okay.
So all the population that we have will get trained into the new technology. One more reason or why we have to do that is because, as I think I talked about it earlier as well, from TCS perspective, it is as a new technology comes in and as you ride the new wave, you have to ensure you can't buy that or you can't acquire that kind of talent from outside. You have to skill and reskill. So that has been the strength, the way TCS has grown. And by rotating people, by training people, by rebuilding that kind of capability, and we'll continue to do that. So, and last year I think we did talk about the entire investment that we had made in building our own learning platform so that we can provide anytime, anywhere learning opportunity to all our employees across the globe. And that is paying out. So I think from a learning point of view, there's tremendous opportunity within TCS. There are multiple things that we are doing to not only train people in technology, but also in terms of building the domain skills, the domain academy that we have created within the organization. These things the focus will continue.
Rajesh, sometimes you have to take big decisions based on gut calls and body language. Why am I getting a sense from your body language that FY17 will be a better year? I asked this question to Chandra, he ignored it, but that's my gut call, looking at your body language.
Your industry is very different from mine. I can't tell you how to run it. We are telling you what we are seeing in ours.
But good luck going forward, gentlemen. Thank you very much. And with that, it's back to the studio.
Thanks.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.